I just looked at the log chart of Bitcoin. That trend, you can extrapolate it, and somewhere around 2030, it'll be $1 million. That sounds as ridiculous today as it did when I first bought it at $200 and I put a price projection of $100,000. I said it's actually going to $1 million, but I'm going to discount myself for being an idiot by 90%. So it cost $200. It could go to zero at that time, certainly, because that was 2013. But my price projection's 100,000, and people said this is ridiculous. I said it's the best macro trade of all time. So the $1 million doesn't seem that preposterous. The other way I back it out is when I look at the adoption of cryptocurrency. So you use as a proxy the number of active wallets. Now we all know that's not a perfect proxy because people have multiple wallets. But you compare that to IP addresses for the internet, start them at both 5 million. Now people have multiple IP addresses as well, so it's very similar. It's just directionally gives you an idea. Crypto is growing at twice the speed of the internet in terms of adoption. So it's the fastest adoption of any technology in any asset class the world has ever seen.
What if I told you there's an asset that could realistically be worth $1 million by 2030? Sounds crazy, right? But that's exactly what former hedge fund manager Raoul Pal is projecting for Bitcoin, the pioneering cryptocurrency that's being adopted twice as fast as the internet was in its early days. Pal calls Bitcoin the best macro trade of all time, and his analysis will blow your mind. Just wait until you see the data he uses to back up his $1 million Bitcoin projection. It's time to go down the rabbit hole. Watch these mind-blowing clips from Raoul Pal's latest interview where he drops some serious truth bombs about Bitcoin's astronomical growth potential. But be warned, after watching this, you may never look at cryptocurrency the same way again. Pal's $1 million price target for Bitcoin by 2030 is based on extrapolating the logarithmic chart of Bitcoin's price history. He argues that if the adoption of Bitcoin continues at its current pace, the logarithmic growth curve suggests that the cryptocurrency could reach $1 million in the next 7 years. Pal acknowledges that this prediction might seem ridiculous today, just as his initial $100,000 price target seemed unrealistic when he first bought Bitcoin at $200 in 2013. However, he points out that the adoption of Bitcoin is happening at an unprecedented rate, faster than even the internet's adoption in its early days. Al argues that the halvings, coupled with the increasing demand for Bitcoin, create a supply-demand imbalance that tilts heavily in favor of demand. This imbalance, combined with macro factors such as government stimulus and debt refinancing cycles, can fuel a crypto summer, a period of explosive growth and price appreciation for Bitcoin and other cryptocurrencies.
Crypto is the best performing asset in the world for 3 years, and then it's the worst for 1 year. That first year is known as crypto spring. Sometimes it can be a bit choppy, it could be like spring. Some days it rains, some days it's sunny, but every day it gets a bit warmer. We had a pretty decent crypto spring. I mean, Bitcoin was up 150%. Then we started, and we're in the process of transitioning to crypto summer. And crypto summer is when you start hitting all-time highs and things start going bananas. And we're very close to that now. You know, we've got to the all-time high in Bitcoin and we've been messing around. So whether by the time this video comes out or not, it's broken out or it hasn't, we don't know. It doesn't really matter. You know, it's pretty standard to have a chop around for a bit. And then fireworks happen. And really the fireworks truly happen when altcoin season comes. And that comes in crypto summer. And we're starting to see the first signs of that. It's been meme coin season for a while now. And I think it will drag, you know, the big memes like Doge up. And before you know it, even everybody, I find it amusing, everybody is writing off Ethereum right now. And exactly the same happened in 2020. In 2020, Ethereum was underperforming Bitcoin in spring, as it always does. Then it started basing, and then by the end of the year, it just never stopped outperforming. And I think we're in a similar kind of pattern, and that's typical of altcoin season.
Let's talk about ETH, let's talk about Solana, but this video is definitely coming out before the Bitcoin halving. So, especially for new people just entered the space in the last 6 months, the day of the Bitcoin halving, what should they expect?
Nothing. It's a coin flip between it going up and it going down. But what we do know is the supply of Bitcoin from the miners will halve. So over time, there's less new supply, and therefore the supply has to be met by existing participants selling. Now, considering about 60 to 80% of all Bitcoin holders don't sell, they just hold, there's actually quite limited supply around. So when you add in a kind of macro bull market, it tends to then tilt the supply-demand imbalance wildly in favor of demand. Not enough supply, too much demand. Add the ETF in, and that adds more FOMO. It's easier for people to get in, and before you know it, you start building this banana zone cycle. So the halving itself is a non-event. It's the signal that you're about to come into crypto summer, which happens to coincide with the presidential election years every time, and it also corresponds with what I call the everything code cycle, which is the debt refinancing cycle, which is the macro cycle. They're all the same thing. So you get this kind of powerful dynamic of politicians giving out free candy because they're going into an election, stimulus. You tend to have a liquidity cycle because of the business cycle, because they have to refinance the debts of the governments. And you tend to have the Bitcoin halving, which is a reduction in supply. And that's why these periods get really quite exciting. So if we just assume that growth slows, as it did with the internet, because once you get bigger and bigger numbers, it's hard to grow at such a rate. So it goes from, let's say, 175% a year where it's been trending, and goes to 43% a year, which is what the internet did from year 8 onwards. Well, crypto gets to 1 billion people by the end of next year. 1 billion active wallets. And it gets to 4 billion by 2030. Well, at 4 billion, the price will certainly be $1 million. So it kind of backs out from the adoption of the technology and of the log chart, because the log chart basically is the adoption of the technology. If you think of most people who've got credit card debts or mortgages or interest payments on cars, it just makes everybody's life a little bit easier. And if you've got a little bit more discretionary spending, you might be able to put it into the market. And so at the margin, it'll help. I mean, obviously it would help a lot if rates went down to 2%. Are they going to get there or not? Certainly not this year. Maybe next year. Depends what happens to inflation, depends what happens on a number of different levels. But really, it's not interest rates that actually drive the world. It's liquidity. Liquidity is the money that the central banks put into the system, often in conjunction with the government, to try and generate economic growth or drive markets. And we bottomed in liquidity, I think, again, last time we spoke, back in November 2022. That was the bottom of the liquidity cycle. It happened to be the bottom of the crypto cycle and bottom of technology, because those are the forward-looking asset classes. And going forward, my work suggests that liquidity should continue to ease all the way into 2025. So therefore, if we've got rising liquidity against this backdrop, it should be positive.